Good? Cool. Good evening, everybody, and welcome to Cake's Market Meetup here for Q3. My name is Sam. I'm the CMO of Cake Group, and I just want to bid everybody a really warm welcome to our event here tonight. I think we've got lots of members of the community, lots of partners and friends from the space here in Singapore. Not only Singapore, because I know there is a whole bunch of you who have traveled from far-flung corners of the world, not least Europe, to join us here this week. It's obviously a really special week here in Singapore because there is a big crypto event happening, so there will be lots on. And we're really excited to kick it off here today with Julian, our co-founder, who's going to start by giving us a market update, bull, bear, boring, for the remainder of 2023. Let's hope it's a bull. And then u-zyn is going to be joining us to talk about the reemergence of Bitcoin technologies and build a lot of the building that's going on in the Bitcoin space at the moment, which is going to be really exciting. So thank you again for joining us. We're really happy to have everybody here. Our door is always welcome, so if you come back later in the year, please do come in and say hello. And without further ado, I'll hand over to Julian.
Thank you. Thanks, Sam. Thank you. Welcome, everyone. Welcome to the office. Can I know from the past meetups, obviously we're doing these meetups quarterly. So this is Q3, it's a bit of a late Q3, and I'm going to try to kind of share a bit on what happened since the last meetup, which happened in April, and what's going to happen until the end of the year, maybe. Always difficult to make predictions, especially about the future. Can I know who of you is the first time here at one of our meetups? Who has been here before? Show of hands. Okay, definitely more people have not been here. If you're here for the first time, quick warning from my side. I tend to be someone who always tries to look at topics from both angles. So if I look at crypto, I always try to criticize it, and I always try to hype it. So you need to get used to this a bit, because sometimes people struggle with this. I want to say one thing. I wouldn't be in crypto. I wouldn't spend my time in crypto. I wouldn't build this company if I weren't incredibly bullish. That still means I try to stay intellectually honest. I try to criticize ourselves on how we can improve. And I just want to double down on this, because sometimes if you only see me on Twitter or if you only see me on certain things, you sometimes tend to believe that I may be super skeptical, which I'm not. I'm just trying to stay fair and intellectually honest. So what I thought, we're going to split this today in probably two parts. One is we reflect what happened since our last meetup, so April. I'm going to put this a bit into context so you kind of understand a bit what happened since then, like what was the time. We're going to reflect a bit, and then we're going to try to kind of look forward over the next 3-4 months and see what could potentially happen in all this. To kind of set the stage, April. What happened in April? Crypto, you put this a bit into perspective. Q2 hadn't started yet. It started very, very slow. Q2 was more from a hype from Q1. We have the banking crisis in March. If you remember this, in the US, this was a major, major impact. And that's kind of how the quarter started. Crypto did super well in Q1. The major question was, are we going to continue this in Q2, or are we going to slow down a bit in Q2? And we're going to look in how was March, how was April, how was May, how was June, how was July, August, and how did we get to this now? And can we draw something going forward? Was it true to, I don't know, go away in May, but remember to be back right now in September? So we're going to look at this. First, two things that happened in our group. Very first thing that happened in Q2 was the renaming, and we restructured our group in a sense where we really wanted to put some framing to all of this. So for those that don't know this, Cake started as Cake DeFi over 4 years ago, and the more and more people we added more to the company side, to the corporate side, to the investment side. Some of these team members still felt with Cake, but they couldn't associate with retail because they were working on the stuff. And so we decided to structure the group properly and had them basically the Cake group. And then we had those 4 verticals under with Bake, with Levain, with Birthday Research that does the R&D, and then Whisk as a venture capital arm. So that's kind of how it's structured. Obviously, from the retail side, you probably hear from Bake. Tomorrow, for example, Birthday Research is organizing the Ord Summit. That's going to happen tomorrow. Then on Thursday, Levain is having an entire session in the morning that's completely closed door, but just for kind of reference for the enterprise side. And we're not doing much with Whisker in this week, but just so you kind of see this a bit. So this was, I think, the major thing for me kind of looking back. And sometimes on the big side, you forget how many things we're actually launching. We launched so many coins, so many services, so many products. I would really highly love if you download our app on bakes.io and just try this out and play around. And at the moment, there's actually a very special liquidity mining promotion going on where you can make some insane returns. So, but I'll share this a bit later. Good. This is what happened in our meetup in April. These were the 10 predictions. I changed this now always to predictions, but today also when I make predictions for the next 3-4 months, I always change it to questions because I know how people are. They just take a picture and then it says predictions on there. And then like you're not allowed to give financial advice, so you're not allowed to make predictions. So, but now obviously these were kind of reflections or points that I had. So for me, these were the 10 things. After incredibly strong Q1, are we going to see a reversal in Q2 or are we going to see the hype continuing? Chapella upgrade, this was obviously April, if you remember this. Then we had the entire story around digital currency group. This is still something very much looming. We'll talk about this. Is the US selling their $1 billion worth of Bitcoin? Are we going to see further crackdown? This was a major, major theme in Q2. You will see this. Maybe you forgot about it already. Then, are we going to see a full-blown economic crisis, real estate collapse? Is Europe going to do better with Mika? That happened. What's going to happen to the Fed? This is an entire topic of the last 1.5 years. And are we going to see a US dollar hyperinflation? There was this entire bet going on with Balaji who said Bitcoin is going to go to $1 million. And that was the entire bet, if you remember this. Now, let's kind of dive through. This is what happened price-wise, and I'm starting with this to kind of reflect on what happened. So you look at this here. Bitcoin is on the left, Ethereum on the right. Returns very similar. I don't think there's much difference in this in Q2 and Q3. Q1 is a difference. And interestingly, Q2 turned out positive, 7%. So in first glance, you might think, wow, positive quarter, definitely positive sentiment. Sure, Q3 so far, negative quarter. Probably maybe the end of Q2 it looked really positive. Now it looks kind of negative. Let's see how this is going to play out. Ethereum very similar, but now comes the interesting part. If we look at the monthly, and you will see Bitcoin and Ethereum is actually very similar, so I just put this in there for completeness. But what you see is the following. So end of March, very positive start. April, kind of holding on. That was when we had our meetup. May turns negative. And then June happens with 12% plus. So that's obviously a very interesting month. And then July negative, August negative, September negative. So one thing, if I can just point out, just for kind of visualization, imagine June would have also been negative. Let's say whatever happened in June would have not happened. We're going to look at it. Is there a reasonable reason why the price went up or not? Because then it would have actually turned completely different, where this wouldn't be a positive quarter. It would have actually been just plain negative. So very interesting to look at. This is the price section, looking at the actual price chart. So it starts here in April, goes all the way until today. Price goes down, 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 down. Suddenly we have this, and here's the funny thing. Look at when this actually happened. End of June, 26. Bam! Massive jump up. And now, August, we dip down again all the way, and we're now basically where we were almost at the end of Q2. The emotions that maybe or maybe not you have today are more on, we're back, we're back, we're back, oh, it's over, oh no, no, that's the end, oh, we're back, it's over, well, we're back, and it's over. So this seesaw up and down. So what's very clear, it's been a very rough 4 or 5 months. The emotions are roller coaster, and obviously the question is why. And there are 3 things that stick out to me. If I have to reflect on the 3 things that kind of stick out of all of this, was Ethereum with the Chapella upgrade. We discussed this so much, we're not going to discuss this much this time because the prediction there was that Ethereum is going to outperform Bitcoin. Except for June, it actually did, but this one kind of week killed everything. It's going to be interesting. What was that week? That was BlackRock. BlackRock saying we're going to do a spot ETF. And the other humongous thing that happened was the SEC and Binance. And this is something that people maybe today already forgotten about because it feels like it happened ages ago when it actually happened just actually 3 months ago. And now the interesting question is, the Ethereum Chapella upgrade obviously is done. Not much to kind of talk more about this. But the spot ETF, that's going to be a super relevant topic over the next 6 months. And I actually think the US crackdown, especially with Binance, is going to be a super relevant topic. And to me, these are going to be the wild cards that are going to predict what the prices are going to do going forward. So let's go through. This is the emotional roller coaster ride. I'm just putting this in for completeness. Actually mirrors the price chart very much. Not much to read out. One thing that I want to really start with is actually the crypto industry is truly in a winter. And June, and that's the key part, is really lying about this and kind of shades what actually is going on emotionally. And that's just because of that June hopium with the Bitcoin spot ETF. Now, the very left, you can see new crypto companies getting started. This basically is dropped by 80%, 60%. So in the US, almost no new crypto company gets started. I think Singapore, the statistic is very similar. I don't have it for Singapore, but it's very similar. This is new Twitter followers to very large crypto accounts. Basically, nothing is happening. People are leaving. New YouTube views, basically going down to zero. So if you're feeling depressed in crypto right now, you're in good company, because many others feel depressed as well. And there's always a good side to this, and you have to understand this, right? You always have to reflect, is the price down because of irrational reasons, or is the price down because it's rational? And that's always what you kind of have to reflect on, and so that's why I want to start with some of the fundamentals. Trading volume, extremely down. Actual settlement volume, so this is settlement volume, is down. So people are not using the coins, people are not trading, it's stagnating, people are showing very little interest, and it's just a very, very, very tough period at the moment. For me, Ethereum, I think one of the only highlights in all of this, if I look at this, is that Ethereum with the Shapella upgrade actually managed to have a smaller circulating supply. That's very powerful if you actually consider this. Pretty much all blockchains are inflationary, so all blockchains create new coins. Ethereum is used so much that it's deflationary. I think this is very powerful. And if you ever see me like posting why I'm so bullish on Ethereum, to me, it's not so much that the total supply goes down here, it's the mechanism why it goes down. And the reason why Ethereum circulating supply goes down, because it's actually used, it gets burned. And to me, that's really powerful. Maybe a quick pitch on this. If you want to stake your ETH, have a look at our platform. We're the only platform that has no waiting time. The reason we do this is because we use our own float to pre-fund those nodes, and then we circle them out with your funds when they come in. We always make sure that funds are segregated, but basically we swap your ETH with our pre-funded nodes, and then we put ours in again. While we lose a little bit of money on our end here in rewards, because we would be getting rewards, this actually allows us to scale really aggressively and actually grow our staking supply. Okay, regulatory crackdown. That was a key moment. If you remember this, we had Binance, we had Coinbase, we had all these security tokens suddenly, and obviously we had the Ripple case. First, Ripple looked really good, surprisingly good, where everyone said, hey, wow, Ripple won. I don't think that's any secret, because I think he mentioned this publicly as well. Today I had lunch with the BitGo CEO. I don't know if you know BitGo is a major US player that does a lot of infrastructure. So we had lunch today, and he has been in crypto for 10 years, and we had a discussion today as well on the Ripple lawsuit and how he sees this. And he said that he feels that the judge got the Ripple lawsuit right, and he thinks that the appeal the SEC is filing is not going to have any merit. Very interesting. Coming from him, and I think he shared this publicly as well, so I don't think there's much of an issue in me sharing this. But so that obviously leaves a bit of this. And then the entire week that rescued the entire Q2 was this entire ETF hopium galore. It started with BlackRock, and now it got joined with an Ethereum futures ETF and an entire Ethereum spot ETF. And I'm not kidding. If you're asking me of the one single wild card that crypto has in the next 6 months, when I would flip from, it's gonna be a tough 6 months, that's my honest opinion. Like I wouldn't expect the crazy pumps right now. I'll tell you what I'm doing, but I wouldn't expect the crazy pumps unless one of those spot ETFs comes. If this comes, I tell you, it's gonna flip around, and we're gonna go from, oh my goodness, it's like so slow and nothing is happening, and bam, it's gonna rip your face off. And it's gonna be so dramatic. Like, I would not be surprised if we're seeing a new all-time high in Bitcoin and in Ethereum with those spot ETFs approved. And maybe not even because it's actually fundamentally so game-changing. It's just because of the hype, of the story, of everyone feeling that they're missing out, FOMO. So that is something that I just want you to be honest to yourself about, that you are aware, if you have no Bitcoin position right now, I think that's dangerous. Having no Ethereum position right now, I think it's dangerous. Having a full-on Bitcoin position right now or a full-on Ethereum position, I think that's dangerous. Why? Because neither you or I know if we're going to see a Bitcoin spot ETF or an Ethereum spot ETF. We're not going to know. We don't know. So I put this there, and you will see me talking about this more at the end when we talk about predictions over the next couple of months. I think it's absolutely essential to understand. Great. The main topic, if you remember from last time, was that I told you why was I wrong in my Q1 prediction. So in Q1, I said we're going to have a bit of a tougher Q1 for a very simple reason that I don't see where the momentum is coming from. And then I was completely wrong on this because I had completely missed that Binance was there, and Binance had really pumped up the market. We had talked about that in Q2. They're probably not going to do this anymore, and this is exactly what happened. So Binance stopped selling their BUSD because they had no more BUSD, and then actually stopped buying. So this was the buying. Some people say they maybe even sold. I'm not 100% sure if this is true. Not sure. And then here, this is the BlackRock kind of pump. But what they definitely did, and the question is just in what extent and how dramatic, was they had to somehow pop up their BNB price. Now, in Singapore, depending on who you listen to, and Singapore obviously has a very close connection always to Binance, depending on who you listen to, it's either guaranteed that Binance would have almost gone belly up, and just them selling hundreds of millions of dollars of Bitcoin is the only reason on why they managed to pop up the price. I don't believe that side of the story. I also don't believe that side of the story that maybe some of the media says, or maybe CC on Twitter shares where he says, oh, no, he didn't do anything. So I think the reality is somewhere in the middle. It showed really well in the trading volume as well. And I think one of the main sellers, if you ask them, so why did the price actually go down over the past couple of weeks? I do think one of the main reasons is Binance. The Binance drama, in my opinion, is only going to get worse. The stories that I hear from behind the scenes around a Department of Justice investigation are way closer and way stronger than, I don't know, what we are hearing in the public. So I would not be all too surprised. Now, one thing that I do not believe is that they are under-collateralized. So I know these stories where people say, oh, Binance doesn't have the customer funds. I belong to this group who actually thinks they have the customer funds. I just think the way they handle business, the aggressiveness that they went into the market, their compliance rules just caused them not to kind of follow all the rules, and now they're kind of paying, like they're getting charged because of that. But I don't think that Binance doesn't have your money. Should you leave your funds on Binance? I get this question all the time, and obviously as a CEO from a different company, I have to be very careful with that answer. If you have to have your funds there for certain reasons, if you're a market maker, or this is your only exchange that you have, I'm not sure if this is the biggest worry I would have in crypto. I think there's many others. But if you have other options, other choices, I just don't understand why, with all this news that's going on, all the Binance drama, all this stuff, why would you voluntarily leave your funds there, right? So I think it's a bit of a risk-reward thing there as well. Binance definitely one of the sellers. And then the other humongous sellers have been miners. And we see the data on this crystal clear. How does this data get tracked? How do you know that data? It's actually always very interesting. I always try to put in some technical stuff that maybe people don't know so well, and then I try to put in things that people know really well. How can you track that miners are selling? Even if these are, I don't know, if these are unknown wallets. So the mining transaction is always the Coinbase transaction. It's always the first transaction of a block, and it is the only transaction in every block that doesn't have an input. So basically, that transaction doesn't need to have a referring coming in to go out. That's because it's the mining transaction. And so these transactions can simply be tracked by all these tracking sites. And so what you then do is you look at, do these so-called UTXOs, unspent transaction Coinbase outputs, are they being sent to exchanges or not? And if they get sent to exchanges, then you can track that. And over the past months and actually weeks, especially over the past weeks, the F2 pool has been super aggressive in selling over $100 million, but miners have been selling over the past couple of weeks. Now, there's different stories to why. I don't buy that story that miners are trying to time the market. I don't think so. All the miners that I personally know, they're not much in a sense that they try to time the market. They just want to make money. So they get those Bitcoins, and if the price goes up, they hodl a little bit, but then they sell with, do not have much risk, but get this extra alpha. So I think it's very straight. And yeah, since I think the demand right now is just very light, they tend to then move the market a little bit. Huge story was if the US government sold Bitcoins in the past couple of months. We had no answer from them. No one knows. This is still a bit of a rumor. And the reason why this is actually an important rumor, because they had said in Q1 that they're going to keep selling Bitcoins. So far, we don't know. And obviously, it would be good if they had sold, because we're actually going to have 3 major price pressure events in the upcoming months that are very, very, very likely to happen. And so it would be great if that price pressure event from Silk Road with the US government actually already happened to a great extent. So this is just something you need to be aware of in the next couple of months. There are 3 major price pressure events. We're going to talk about all 3. And the last group that has been selling, except for a few weeks in June, are institutions. So this is institutional crypto asset flow. CoinShares is reporting this. And obviously, except for those when we had this Bitcoin ETF hype, everything afterwards has been selling, selling, selling. And that explains why the price goes down. There's just very little demand. Retail is very little buying. They are dollar cost averaging a little bit, but it's not much. Institutions are selling. Miners are selling. Maybe the US government, exchanges. And that explains really well why, except for that one hype, we had seen price go up in June. And then since then, we have been seeing the price go down. Now, why is this important? I just want to see what the next slide on this is. Why is this important? Because you need to ask yourself this, right? And this is all that matters. I sometimes see those slides or those points that say, this is the all-time high, this is the all-time low, this is what the price did over the last 3 months. It's entirely irrelevant. Unless you can time travel, it's entirely irrelevant what the price did over the last 3 months. It's useless. There's nothing you can do with this information. What you need to be able to do is to make a decision, what are you going to do with your purchase power today? And the biggest fallacy you can have is to have a so-called endowment bias, which means simply because you are in an investment, you think that's the investment that today you need to keep going forward. That's just being stupid. What you actually should be doing is you should always calculate in whatever fiat currency you calculate in, Sing dollar, US dollar, euro, whatever. And basically, if you sit here today and you go home after the meetup, you calculate how many US dollars to actually have. And you don't calculate in Bitcoin, you don't calculate in DeFiChain or in ETH or something, you just calculate in US dollars. And you ask yourself, with all the information, how would you allocate those US dollars today? That's actually how you would do it. Then you have questions like, what does this mean for my taxes, and what does this mean for legal implications and so on, but this is how you would do this. Now, why is all this so relevant? Because I'm asking myself today, is any of this going to change in the next couple of months? Do I see any changes there? Do I think institutions are going to stop selling? Do I think Binance is going to stop selling? Do I know that the US government, has the US government sold? These are the fundamental questions I ask myself. Because if there's some change there, then I would be way more confident that the price would go up. If I don't see much change, then I would expect more of the same. And I would actually expect a lot more of the same. I know more of the same, and here's the key thing. I'm going to really go quickly. You probably think the price went down, but actually it didn't. The price is just basically where it was before the ETF hype. That's the important part. So the price went down here, but over the last, 3 months basically, the price just went sideways. And that's important to understand. And it even didn't go that much down here. It went down maybe 5 to 10% in Q2. This is not so much. So I know it feels really winterish. And people, when you ask them what's the price doing, everyone says, oh, prices are going down. It's actually not true. Prices are going sideways. And I don't know who of you has been in bear markets. The bear markets are characterized by this super boring, terrible sideways movement. A little bit up, a little bit down, a little bit up, a little bit down. But you constantly actually move sideways. And this is what I'm expecting when I talk about going forward. I'm actually not expecting, when I say I'm expecting more of the same, people are like, oh, so you mean prices are going further down? I said, no, if you actually look at it, just sideways. We're just here where we were actually a couple of months ago. And it's just super frustrating. And that's key to understand. And that's why it's so important to look at the past, but not because you think from there you can infer to what the future does, but you can kind of get a bit of a sense on what you expect and what actually happened. Of all the things, right, if you actually look at the only thing where activity went up, there's only one thing. You can look at NFTs, you can look at on the Ethereum chain, you can look at whatever. Everything is down. Literally, doesn't matter what metric. I don't think there's a single metric that's up unless you look at friend.tech for a short period of time right now, but everything else is down. The only thing that has been fundamentally actually been up since our last meetup, and we discussed this last meetup, is Ordinals transactions on top of Bitcoin. Now, u-zyn is going to talk a lot more about this. There's an entire day tomorrow about this, and it's going to be very interesting, right? Here's my honest thoughts about it. I'm super excited about Ordinals, very. I just think right now, what's happening right now with Ordinals is not so exciting yet. Because at the moment, it's mostly just trading JPEGs. It's not so exciting yet. But the power of having on-chain data on Bitcoin and then being able to be useful on Bitcoin, I think that is the start of something that's insanely, insanely exciting. So to me, that's why it's so important. Not because I think you should now go out and invest in the next Ordinal to try to get rich. You can invest in Ordinals, just be aware it's super speculative right now. But I think what's happening as a general tendency, I think that's the super exciting part. It's the only graph that I could find over the last 4 months that actually looks really, really good. Everything else looks more like really not so attractive. Cool. DeFiChain, one of the few things that did well price-wise. Now, if you look at Bitcoin as well, actually did quite well. One has to say the reason was simply because of the last weeks, DeFiChain really recovered. The reason why it recovered, and I know many of you hold DeFi, that's why I always pick out Bitcoin, Ethereum, and DeFi, was that just a lot of stuff has been happening on the chain. New liquidity pairs, a lot of DeFi focus again, a great special DeFi for staking locked up ETH and using those rewards to burn and buy DeFi. And then obviously the big thing, and I think today they got out, I'm not sure if the node is out already, but I think today, is Persona here? No. But I think that today they're actually putting out the final node version on MetaChain, so that finally the MetaChain layer is ready to go into mainnet if there's no further bugs found. So I think today's that kind of a super exciting day. So that's what's been kind of really exciting, and so yeah. A lot of projects, a lot of stuff happening there. So makes me very, very bullish after a year of a lot of bearishness, to be very fair. So I know it's not like to be super excited when you see like a 50% pump after something went down 60, 70%, I get it, but it's still a start of something, so that's really, really good. Okay, general markets, let's cover those quickly before we then look into the future. We were actually spot on discussing the Fed interest rate. I think, why were we spot on? Because I think there was not much that happened. We had one interest rate hike, and that was it. We were at 5.25%. Now here's the big surprise, and I think 4 or 5 months ago, no one had this on their radar. Really, no one. If I'd asked people what they think what the US dollar is doing for the rest of the year, everyone was bearish on the US dollar, everyone. And the US dollar did the exact opposite. The US dollar is as strong as hardly ever before. And obviously in the crypto space, this is what people never want to discuss. The DXY, the Dixie, which is the dollar index, has been ramping up. It's incredibly strong. And to me, that's just something you have to be really careful about. And I mean this because people forget what this means. And it means generally that everything that's denominated in US dollars could be struggling. Now, crypto has been struggling. Stocks to a whole part, let's look at stocks. I think that's the next slide. If you look at stocks, so here, we're actually having a really, really, really good year. You can see this here in row 11. That's the S&P 500. Now here's the big issue. Now, if you look at the S&P 500, it went a lot of sideways. And the performance all came from the large tech companies. And that's what people really forget. So the US dollar index has been taking its toll on everything that's measured in US dollars. Crypto, struggling. Stocks, actually struggling. But you have this super small group of stocks called tech stocks that have just been ramping. And they were ramping all the way until the end of July. And then in August, they started their correction. Now in August, a lot of these tech stocks actually have really started to correct. But one thing that is really impressive, and I just really want to kind of give this to you. If you're invested in crypto, you're just dreaming of these numbers right now. But if you invested in some of these large stocks, NVIDIA, Apple, Microsoft, the NASDAQ as an index, the S&P 500, Facebook, Google, Tesla, Amazon, and Netflix, you can see the combined results. So the first kind of chart is 2022, everything down. And then 2023, a lot of ups. And then what's the combined result? And it's sorted by the combined results. And if you look at most people investing right now, especially in crypto, they had their peak at the end of 2021, right? That's when most people had their peak. A lot of these stocks actually have their peak now. That's crazy. This is really, really, really crazy how strong these stocks are and how difficult it is to outperform some of those tech stocks. Now, I've been very vocal that I would be very cautious right now to be overweight these stocks. I was overweight. I actually rebalanced in July and August. I was very clear about that I'm going to rebalance on that. And I mean, so far it's been a good trade, but it's not something I'm looking in the short term. It's more that something that I'm looking more in the long term. And why? It's just, to me, the dollar is getting so strong now. We're going to talk a bit recession fears. And it's just been incredible to kind of see how well that performance is. Actually, these stocks, this is a very interesting chart. It compares over every month the various asset classes and what was the performance from the beginning of the year. So if you look at the Bitcoin chart, it's the second row. You actually see how this chart really kind of ramps up in Q1. So March, Bitcoin is kind of slaughtering everything else. But then, actually, Bitcoin starts going down. Crypto goes down. It kind of corrects, moves sideways, right? So you compare August with like May. It's basically almost sideways. But these stocks actually keep going up. Apple keeps going up, keeps going up, keeps going up. The NASDAQ, I think that's the craziest part. Like, if you want to just get a very relatively risk-free option with like investing, then just invest in the NASDAQ, and you actually, I mean, sure, you make a bit less than Bitcoin right now, but 40% in the NASDAQ versus 57% in Bitcoin is just a total different universe. So quite interesting just to see that. Which one is the big loser on this? It's gold. And to be honest, that is also a bit of a surprise to me. Because whoever I spoke to about a year ago with like, you know, the economy is collapsing, everything is crashing, it was just so interesting. Just yesterday, actually, we had a barbecue at my place, and we had a good friend of mine was over, and he's a super, super, super successful trader. Has a successful company, but a successful trader. He has zero attachment to a single investment. Like, he doesn't care. If he can make money in it, he's going to trade it. He goes long, he goes short, he couldn't care less, right? So, and the interesting thing is, I asked him if he had to put all his money into one asset right now, long or short, whatever he wants, over the next 5 years. He said gold. And to me, that's just so surprising. And that's coming from someone who really has no emotional association to a single investment. He doesn't care. Like, he is not, oh, I love stocks or I love Bitcoin. He trades anything, doesn't matter. And so that to me is just super surprising. And I see gold obviously doing super badly. So I don't know. Maybe he's going to be a genius over the next 5 years, or we're going to see the same going forward. If I reflect since the last meetup, what were 3 underperformers? Gold, very clearly, and I didn't expect that. Most cryptos, and I think the big loser is the US regulation. We're seeing this left and right, where companies are leaving. They're not doing anything there. I think these are the big 3 losers. 3 winners for me. DeFiChain, for the very first time I put them there as a big winner. In all the past meetups, I always had them as someone who didn't do well. Tech stocks, surprising to be honest, because I also thought they're not going to do so well. And the biggest surprise, here's my biggest surprise, the US dollar. Biggest winners. And it's going to be very interesting when we're going to reflect who are going to be the losers, who are going to be the winners going forward. Okay. So, if you can read this, I marked green and red, everything that I had in the predictions right and wrong. I was spot on most of those things, except for those 2 things, which is the crises and the real estate. I'm still surprised how long this stuff can hold on. We're going to talk about both things, and maybe I'm, again, completely wrong on what I expect in this, because my statement on this last time was that I expect that we're going to see a bit of a harder landing, and we didn't have that at all. I mean, everything right now is holding on, and people are even talking about that we're definitely not going to have a hard landing. It's going to be in a soft landing. So we're going to try to do the same thing for the day session for the next 3 to 4 months. So the rest of 2023, where are we? Are we on the way up still? Probably not. The question is more where on the way down or where on the sideways are we? Are we in complacency and we have the 50% crash ahead? Are we on anxiety? Are we here more on the side? Are we more on the anger side? Are we more on the depression? Where on this entire chart are we? And I think this is one of the hardest things. I don't try to kind of forecast those things. I think it's almost impossible. And many times you're completely taken by the wrong side. So, yeah. OK, so very first thing. I mentioned this before, and I'm going to stick to my guns. I think the US is heading into a hard landing. I know that most people are talking about the US is heading into a soft landing. I think they're going to head into a hard landing. To me, I think at some point we're going to see a recession. How bad is that recession? I don't know. But when I look at the actual data, I cannot understand how this country is going to survive this, like without having a recession. Here, credit card data. This is the credit card balances. We are super, super high. Interest rates for credit cards, super, super high. Now, I don't understand how people are going to make this. They're just living on the credit card. That's how they're surviving right now. At some point, this is going to rip. I just don't understand it. I mean, this is data. The data doesn't lie on this. Loans, student loans are now due to be paid back. Default rate on the credit card, high as ever before. I don't understand it. I don't understand how they can survive this. Housing, we have the orange line here on the right. Orange line are real estate agents. So in the US, we have 7 million real estate agents for 4 million properties. Real estate is a #1 industry in the US for how to become a millionaire, how to build wealth. And if you look at the charts here, generally the green line is higher than the orange line. Now, I don't know. And now it's basically half. So there's, for every house, there's 2 real estate agents. It's just incredible. The debt people have in comparison to the house value. To the income that they need for a house. It's just insane to kind of look at the data on this. This was 2008 here, and now we're higher than that. I just don't understand how we're going to survive this. I just don't. And with surviving, I'm not saying the world's going to go into shambles and like for 10 years we're dead. I'm not saying this at all. I'm just, you have to, for me, I'm trying to stay realistic that when we talk about why do people invest in crypto, I just want to be realistic on the if-then scenarios. And that's why I'm starting with those pictures here. Personal situation, people have basically no savings, and people are not spending money. Retail sales are shrinking. Not the best stuff I want for the economy. Europe is already in a recession. China is not doing well. And the BRICS are kind of trying to get together and trying to compete with the US. But China is definitely not doing well either. And so here in Singapore, we're definitely going to feel the US impact. We're definitely going to feel the China impact. I get this asked a lot. Why do you focus so much on the US? Because I'm talking about crypto. And crypto is mostly, if we talk about general markets, affected by the US. The Singapore market, the European market has almost no impact on crypto. It's the US, because that's where the majority of the money comes from. So I just want to explain that, right? We can talk about other stuff. If we talk about real estate, I don't think the US matters. Singapore matters. But we talk about crypto, because we want to understand, should we invest in Bitcoin, or should we invest in Ethereum, or should we invest in DeFiChain, or should we not? And here's a funny part. The Rolex index tracks the price on average on the Rolex watches. It has been trending down. And here's the funny thing. People are mentioning a soft landing, this is the black chart here, as high as ever before. This is a soft landing mention. 2000 here on the left. This is right now. We are as strong on a soft landing. So people are trying to convince you all is going to be fine. Soft landing means it's all going to be fine. And here, the highest peaks, 2000. Afterwards, we had a crash. 2006, financial crisis. I don't know. I'm just really, really hesitant on that, right? Again, I know that people then look at me and are like, so you're bearish on crypto or something. Yeah, not what I'm saying. I just want to be realistic. And the reason I'm trying to stay realistic is 2 reasons. First, the Fed has an amazing tool, which is they can always debase their currency. And debasing their currency means I put a lot of fresh money into the system. There's different ways to do this. One of the most powerful ones, which is what they did in 2020, where they gave it to the people directly, and these people started gambling. And they went into meme coins, and they went into crypto, and it ripped everyone's face off that was not in crypto or in meme stocks. They can do this again. Now, this is what the plan right now looks like. The plan right now, when I actually buy this, we're going to see no rate hikes. Maybe we're going to see one in November, but we're going to see no further rate hikes. And then actually next year, we're going to see rate cuts. I think there's actually a really strong chance that we're going to see aggressive rate cuts because the Fed's going to realize we're going to go into a recession and people are going to do really badly. And this is really, really important. If you see this, prices can really start skyrocketing. Maybe not even because there's so much fresh money there, but people are primed now. They're like the little mouse, so like Pavlov's dog. It's like they hear the bell and they immediately start salivating. It's the same thing here. They hear money printing and they're like, whoop, all rushing into crypto. Could easily happen, right? So that is to me an absolute key topic. And there's two charts, actually one chart that tells two stories. This chart shows the money supply, M2, which is a measurement of US money supply, which is the blue bars. And you see the yellow chart, which is the Bitcoin price. And you see, and it goes back all the way to 2011. In 2011, money supply really expanded. So a lot of fresh money came in, went down, and we had a crash, 2014. Then money went up again, all the way to 2017. Then the money went down, and we had a crash in 2018. And then money went up again, even higher, 2020, 2021, and we had a crash in 2022. Now, it's interesting, right? So the first thing is it's very clear that crypto does insanely well when there's fresh money printed. But there's another very interesting question that I would have looking at that chart, and that is, do market cycles really exist in crypto, or is it just M2 that coincidentally, fooled by randomness, for some weird reason always gets printed every 4 years and then gets destroyed or gets down, and crypto just reacts to it. So there's no 4-year cycles like what people tell you to do, but it's more like, I don't know if you ever kind of understand that part where the dog owner walks and you wonder, why does the dog walk in a certain pattern? It has nothing to do with the dog, it has to do with the dog owner. Important, right? So you only look at the dog and you try to understand that weird behavior the dog has. You shouldn't be studying the dog, you should be studying the dog owner. So the question is, who's the dog owner? Is the dog owner the halving cycle, or is the dog owner M2? Not clear, but at the moment I'm really looking more at M2. So if M2 starts going up again, which it easily can because the world is not doing well and the US is not doing well, well, we're going to see the same 4 years of weird cycle. And I always laugh, I always say I don't believe in the market cycles, but I actually believe we're going to see a market cycle next year. But not because of the halving cycle, but because I think the US is going to print money. That's why. Now, tech is in comparison to the S&P. So this is the ratio of tech in comparison to the S&P, as high or close as high as in the year 2000. That is why I'm actually rotated a lot out of tech stocks. I'm not saying that's what you should do. I'm just saying. And also very interesting, here, these are treasury charts where you see treasury yield in comparison to stock yield, 12 months moving forward. And for the very first time in a very, very long time, risk reward looks quite favorable for bonds. It's very rare. I'm not sure if I would put too much money in bonds for the very simple reason because if the US debases your money, it's great that you get your money back, but if that money that you get back is worth now 5% less than when you put it in, it doesn't help you that you got your money back, right? But definitely something to consider. I mean, for example, funny thing, I actually did rotate out of Apple shares, and I rotated partly into Apple debt. Why? Just because I'm a data person. I actually believe this makes a lot of sense. And so I just took out risk from the equity and put it into bonds. Not something maybe you should do, but maybe some food for thought. Again, it's like just like playing poker. If you always play the odds, you tend to win over time. Doesn't mean you win every single game, but over time you tend to win. And so I'm just someone who has an absolute respect for probability, and that's kind of the game I play. So maybe that helps you as well. Sometimes when you watch me on Twitter, you think I'm super bearish. I post like super catchy headlines, like is Bitcoin a Ponzi scheme? Or why Bitcoin is going to go to zero? But then actually, if you actually read the post, so I do this because it triggers people and actually it makes people read the stuff. If you actually read it, then it doesn't talk about that Bitcoin is a Ponzi scheme. It actually talks about totally different things. So it's just a catchy headline. The same on like the El Salvador stuff. And I want to explain to you why I do this and why I believe this and why I'm so picky on this right now and why I've been pushing so much this agenda of making stuff useful. the number one utility right now that crypto has been serving, and it's really, since I'm in this space, it's 9 years, there's one utility mostly, and that is speculation, right? That speculation game is going to keep going if the ETF comes massively, or if M2 goes up. Then we're going to see massive speculation again, and we're all going to be fine. Great, but I can't rely on that. I love to kind of make my own luck, right? I hate that I need to go and hope that the Fed is printing money or that the SEC approves an ETF. If that happens, we're going to all make money, and it's all going to be easy game. But if not, then I think it's going to be a bit harder unless we are going to focus on a couple of things, and that is utility. Sorry, I meant to switch to this slide a bit earlier, so now I talked without that slide, so now I need to double that. So, a couple of things. These are the Bitcoin ETF deadlines. So these are exciting dates. We have one in October, and then we have one in January. I expect that we're not going to see a Bitcoin spot ETF until next year, so I wouldn't be too hopeful about this. So there's going to be some pain, in my opinion. And the data on pure speculation is not good, because the data on pure speculation means we see diminishing returns. These are 5-year charts. How much return can you expect investing in Bitcoin if you held for 5 years? And these numbers consistently trended down. There's only 1 year these numbers went up, and that was 2021. And that was because we had money printing galore in that year. And that's why the number went up. Otherwise, the numbers would go down, 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 down. And there's a high chance, if we only have speculation, that maybe in 2024, we may get close to 0 over the last 5 years, and we have never had that. We actually always had the different view, which was if you held Bitcoin longer than 4 years, you always make money, and it could be that for the very first time in the existence of Bitcoin, the story is dead. And this is quite tricky. So that we don't rely on the speculation, we don't rely on the ETF, we don't rely on the SEC, we have to rely on other utilities. We have to. Because that's what drives value, and value at the end drives price. So that's what we have to do. Now, that's my personal point of view. I put this here. I'm not a big fan of Bitcoin being money, so this is Bitcoin. I'm not a big fan of Bitcoin being money. I never believed this. I didn't get into that space because of this. I always thought Bitcoin is more digital gold. My issue here is Wall Street. The big thing is, and u-zyn is going to talk about this, building on top of Bitcoin. That's my main thing. That's why I'm driving Ordinals. That's why I'm a big fan of side chains. That's why I'm a big fan of drive chains. That's why I'm a big fan of Rep BTC. That's why DeFiChain got started as DeFi for Bitcoin. Very, very, very simple. That's why I'm driving this so much. And the other thing, if you look at, for example, Ethereum or DeFiChain, same thing. The reason I'm driving this so much, the utility part, why am I looking at fees as a measurement? It's because people only pay fees if they find stuff useful. Otherwise, they're not going to pay fees. And so that is why I have such a strong focus. So if you read my LinkedIn posts or my Twitter posts, and they start with this really catchy, and sometimes maybe even you think like, oh, it is a negative headline. If you actually read this stuff, you realize, oh no, actually, he comes from a really good place with this. And that's what I'm trying to do. I'm trying to kind of wake up a few people that, sure, maybe we're going to get lucky again. We have easy money, or we have a Bitcoin ETF, and we're all happy. But what if we're not? Then we have to be ready. And this all comes down to real utility. And so that's why I'm so pushy on all of that. Great, let's be specific. What am I expecting until the end of the year? I'm expecting sideways movement. I really am. I'm expecting volatility, a bit down, a bit up, but I would be surprised if by the end of the year, we see a much different price to what we have right now. Why? It's very simple. Everything that you look at fundamentally points at the same thing over the past 3 months, which is sideways. This is the light line here is the average of the last 5 years, right? So the light line. Green is this year. So we're actually right there where over the last 5 years the returns are. So on average, we shouldn't be expecting much. So if you're expecting much until the end of the year, you're expecting above average, which shouldn't be the case. You shouldn't be expecting above average. There's no reason on why to expect above average. And I mean this from the bottom of my heart. Now, I said there's 3 selling events this year until the end of the year. We talked about the US potentially selling $1 billion. We have on Wednesday, so that's in 2 days, potentially FTX having to start or wanting to start selling $200 million in crypto assets, and these are the assets that they're holding per week. Now this is not good, especially if you're holding these assets, right? It's going to put some pressure on Sol, it's going to put some pressure on Bitcoin, it's going to put some pressure on Ethereum, and it's going to put some pressure on all these coins. It's not good. That's the second one. We're going to have a third one. We're going to look at that as well. It's probably the biggest one. We got, at the moment, we have the dollar chart. This is on the very right in a so-called golden cross, so very bullish. We have the Bitcoin chart in a death cross. Not good. And statistically speaking, you see the different statistics. The price only recovered, so this is always the 6 to 12 months, if there was a major liquidity event from the M2. So you can look at when did the price do well. Let's look at the 6 months, 12 months chart here. Well, it looked really well here in 2015. That was actually the run up then for 2017. 2018 looked really bad. 2019, that was a bit of a run up, but the big one was 2020, 2021 was the crash, 2020, 700%. And so whenever you look at the other charts, whenever you had this kind of formation, it looked not good for the Bitcoin price. So that's why I'm a bit cautious right now. I wouldn't go all in right now. But here's the thing. If you are not in and you have a Bitcoin ETF or you have suddenly M2 expanding, I think you're really going to sit in your dollars and you're going to get nothing for it. I think that's key. The other last part that I think, and it's a bit of a long game here, and I posted this on Twitter as well, is I do have the AI hopium. Because I still believe if AI really takes over, and I'm not talking in a negative way, I'm talking in a constructive way, and there's more AI, they're going to agree on one crypto, or they agree on crypto. I doubt that they're going to use the dollar. And that, to me, is still a very strong case for Bitcoin. So that's a bit of the longer term to kind of really end on a somewhat positive note. So if you do believe in the market cycles, again, I'm not a big fan of market cycles. I don't believe in them, but I know people do, so maybe they're self-fulfilling. We're about halfway through of the toughness. Halfway. Halfway, right? So if you're impatient, you're going to struggle. Halfway. It's just statistics over the last 3 cycles. We're the orange and red dot. It's an exponential chart, 100, 1,000, so halfway through. So, 10 questions that I ask myself. None of them are financial advice. They're going to get changed to predictions afterwards, because these are obviously my personal predictions, but they don't matter anything to you, because these are my predictions. They are my 10 questions that I ask myself for the next couple of months. Okay, first one. Is crypto going rather sideways? Is Ethereum outperforming Bitcoin? Maybe because Ethereum is going to get a futures ETF this year. So you could play this by saying, oh yeah, it goes sideways. Let me go long Ethereum, short Bitcoin. That's how you could play this, right? Long Ethereum, short Bitcoin. You don't bet on crypto, you bet on the spread. I actually believe sideways unless we're going to see a spot ETF, which I actually think is going to happen more 2024. Great. We have the entire digital currency group issue, and that issue is getting worse and worse and worse and worse and worse. Sometimes it looks it gets better, but it actually gets just worse and worse and worse. The third event of selling is the US selling their, the second one was selling their Mt. Gox. The third one is Mt. Gox. Painful. They have like $2.5 billion. Let's see how fast these coins get sold. An interesting trade here could be long Bitcoin, short Bitcoin Cash. Why? Because a lot of these old hodlers rather want to keep their Bitcoin and not their Bitcoin Cash. What's going to happen to Binance? I actually think there's going to be a Department of Justice suit. I think there's going to be a maximum of a further interest rate hike in November. I probably think it's not going to happen. It's going to be irrelevant. Stocks, in a best case, are going to move sideways. I think there is a better idea to invest in bonds right now. But again, this can be very dangerous if money printing starts. So I think it's very dangerous. Hard landing, I think yes, but not in 2023. I think I was way too optimistic always in the timeline on this. Because I remember in Q2, I was like, this is going to happen in the H2. And right now, it doesn't look like this is going to happen in H2. So I'm going to push this into H1. And maybe we're going to do a meetup in H1. And I'm like, yeah, it's going to happen in 2025. And at some point, it will really be a soft landing. Yeah. Again, not financial advice, please. This is really my personal thoughts, how I'm acting. Please do with your money what is best for your money. 2 things that I want to shill from the company side, and that's actually what I'm doing myself. I use this time, especially sideways movements, for dollar cost averaging. Please do this with a good platform. Go to a platform, dollar cost average, into your favorite coins. Obviously, I would love that you do this on our platform. As of today, you can only do DFI, but Ben promised me, and so I'm calling him out here, that on Thursday, we're going to offer Bitcoin and Ethereum as well. So it's, so that's going to work really, really well. And we have like really nice raffles around this. So if you want to get dollar cost averaging, again, I'm just joking here. Ben promised me we're going to get it on Thursday, but you know how it is. Sometimes it gets delayed. So right now you can do this on DeFiChain. There's no fees on this. We have to charge a small fee on Bitcoin and Ethereum, but we're going to try to make this as simple and straightforward as possible. And then we're going to add more and more and more assets. And so that's really my best advice right now. Don't try to time the market. And yeah, right now, today, especially DeFi was approved. So right now there's insane returns on liquidity mining. Please, this is the expert variation. Only do this if you really understand what you're doing. But you can get like 600% at the moment, or 500% per year in returns. It's insane. This is completely legit. I know when people see these numbers, they always think this is a scam or something. No, you just really have to understand what you're doing. It's insane. We're supporting this on the big side by not charging any fees. Why are we doing this? Because we really want to support the ecosystem. And so we're not charging any fees on this. So if you're in Solana, Matic, Polkadot, Sui, ETH, you can get some serious returns on this. Last but not least, I always try to kind of spoiler something, I hope, by the next meetup. The way you kind of see Bake is a bit changed in a positive manner. Because it's not only going to be crypto, it's going to go into a total new array of things. Now there's a little bit of like spoiler ahead here, gold on Bake. The team is working on this. It was the entire plan, once we like renamed to Bake, was to really kind of expand all this. Not only be cash flow from crypto, but really be all about your purchase power, so that we can really empower you to increase your purchase power, to help you to invest, to get easy access, for our mission to level the investment playing field, to allow you to get into a space that sometimes can be very dangerous, very difficult, and very tricky. And so that's something I'm very excited about. I hope over the next couple of weeks we have some even more and better news on to announce here. The team at the moment behind the scenes is really working super, super hard on that. So that's going to be quite exciting. Great. With this, if you're not a customer yet, please become a customer. Thank you so much for my part. And I'm going to hand it over to the very substantial, meaty part from u-zyn, who is going to talk about the social layer on Bitcoin, the meaning on that with Bitcoin, and it's going to talk a lot about what's happening from a technical side. Thank you so much. u-zyn. Looking good with the hat. Looking great with the hat.
Yes.
How does the PowerPoint go?
I haven't put on a hat. Explains what I'm going to be talking about today, Bitcoin. It's all in my head for the last, I don't know, like for the last couple of months now. Bitcoin, Bitcoin, Bitcoin. Yes, so we're going to talk about that. So if you've been in the space for a while, I'm not going to cover a lot on the market side. I'm going to cover a bit more on the tech side. Don't worry, not going to be too technical, but the takeaway I want you to have from all of this is knowing that what you see on the Bitcoin side, the innovation side, I want you to have a takeaway on how this is happening and why this is happening. And I hope at the end of this, you kind of get an understanding as well why there's a re-emergence of the Bitcoin interest that we have right now. Not just me, but in the market in general. I mean, the price doesn't show it that much, but you can see there's a lot of stuff going on Bitcoin side. The blocks are pretty much full now, and there's so much things you've heard about Ordinals and all of that. You can kind of see all of that's happening right now. Right, so yeah, me, CTO co-founder of Cake DeFi along with Julian. I've been in Bitcoin from 2009, active in Bitcoin and Ethereum space. I'm the chief architect of Sand, the first CBDC of the world. It's built on Bitcoin. If you Google that, you're gonna see like built on like some other blockchains that people make up all the time, and sometimes they shield their own coin. Sand is built on that, but no, it's built on Bitcoin. Traded first Bitcoin IRC in 2010, trading Linden dollars for it. And I was just trying to dig up some of the old pictures of my early Bitcoin days this morning, because I was preparing for my talk tomorrow. I'm going to talk a bit about that. And this is my real screenshot from 2011. And for those who are kind of like not sure what you're looking at, this is the mining rewards that I was getting back then. So every day, you can kind of see this like once per day, I get payout from a pool. Pool basically just sharing your hash rate with a bunch of people, because if you mine alone, you're gonna take a long time for you to get your first block, right? So I was mining in a pool. I was getting 1 Bitcoin every day. This was back in 2011, 2012. This is my account. It was insane. But I mean, the price wasn't like the price that we're at today, so I don't know. To be frank, I think I was losing money, but I was doing it to learn about Bitcoin, to learn about what I'm reading. And for me, I'm really interested in this whole cryptography, in this whole, I was in cybersecurity before Bitcoin, so I'm really interested in this whole thing. But if you can take a guess, for 1 Bitcoin per day, what kind of rig is powering that, right? Anyone think it's CPU mining, December 2011, CPU mining, GPU mining, ASICs, no, there's FPGA before that, FPGA, ASICs. No, okay, yeah, you're right. Like, that was before ASICs was invented. So this is the rig, literally just for GPU cards. I was mining in a guest room in my house. And my wife saw this picture today. She's like, don't remind me of all the noise and all the heat that you generate on this room because it was unusable. And we didn't want to turn on an aircon because we're losing money mining that way. If you turn on the AC, you're going to lose more money mining. So we don't turn on AC. The room was really, really hot, and it was noisy as well with all that fans and all that. So there's, so 1 CPU, 1 computer, two graphics card each. I mean, right now you have like those graphics cards you can do like 4 at each time, but back then it was like it's not easy to find. And I was going around everywhere trying to look for graphics card. It was really hard to find. Yeah, so that's what I was doing. And this is what you see these days on the news, right? Bitcoin, a lot of blocks, the daily descriptions for Ordinals are going up a lot, and unconfirmed transactions really surge because as Ordinals thrive, Bitcoin Ordinals are the next big thing in crypto. So you see that a lot these days for the last 3 months or so. Anyone here hasn't heard about Ordinals here? Is this the first time you hear about Ordinals? Okay. For the rest of you heard about Ordinals? Great. Okay, so just for your information, so Ordinals, I'm going to sum it simple. It's an NFT on Bitcoin blockchain. The creator, Casey, which I just met before I came here, because I was late because I was at the event. I was meeting the speakers for tomorrow, and Casey, the creator of Ordinals, was there. And he really disliked someone calls it NFT for Bitcoin, but it's literally NFT for Bitcoin. Yeah, so it's filling up the whole Bitcoin blockchain that's going on right now. And this is our Cake Group's endeavor into the space where we launch a Oddsar, which is an Ordinals Bazaar, where we allow creators to easily launch collections on Bitcoin blockchain in a way that you don't have to spend a lot of money, because inscribing Ordinals on the blockchain itself costs a lot of money. If you do it on Ethereum side, you don't have to put it on blockchain because you are just linking on an external file. So what you see a lot of that, so now it's been like 5 years now since NFT boom, that a lot of those NFTs now don't even link to an actual image anymore because the link is now broken, right? So you just get a marker that doesn't link anywhere because the link is now broken. But on Bitcoin side, it's actually inscribed on chain and forever. So for that, it's actually really expensive to inscribe something. So on Oddsar, before Oddsar, you have to, as an artist, you have to mint every single thing on the blockchain before you can sell them. But on Oddsar, you don't have to do that. You can just create a collection. You mint your collection to prove that all these things that you make are yours, and then people buy them. So the buyer will then mint it on chain, so you don't have to pay as a creator. So we've launched that for a couple of months now. It's been wildly successful amongst creators. And we also have trading as well, so people are trading, buying, selling Ordinals. And these are all completely on-chain. So it's completely trustless. The site doesn't hold any of your crypto, doesn't hold any of your Ordinals. Completely trustless. And this is an event, so I was there just now meeting the speakers and the panelists there. It's happening tomorrow, so if you haven't a ticket yet, go to the website right now, or sign in and get a ticket. Super interesting, a lot of good people there, all the who's who in the space are there. The creators are there, the creators of token standards are there, everyone's there. So yeah, if you haven't been in the space, if you haven't got tickets yet, get your tickets. And I'm going to talk a bit about this. So a bit on Bitcoin, right? So Bitcoin, all along, it has been about money, right? Bitcoin is money. So when people talk about building on Bitcoin, like before all this thing, you don't really build on Bitcoin because Bitcoin is money. Just like USD, just like Singapore dollar, just like all this, you don't build on Singapore dollars, you don't build on USD, you transact, so you don't build. So the things that we've seen on Bitcoin side so far, it's all it has been, before this, it has been money tech, it has been fintech, right? So when you talk about fintech in general, you talk about credit cards, you're talking about like payroll system, you're talking about HR systems and all that stuff where you transact, you deal with money and you don't build on the money itself. And that was the reason why Sandal was built on Bitcoin, because it's supposed to be like money, right? So this has been all along for Bitcoin. Like the tech around Bitcoin before this boom was all about building, transacting Bitcoin. So you have BitPay, BitInstant that helps payment collection and making payments a lot easier. And you have wallets and how you can secure your Bitcoin, basically just making sure that you can hold them securely. And then you have exchanges like Mt. Gox and various others out there. So it's around building around Bitcoin, right? And of course, you have services that offer things on Bitcoin. And they're all transaction, right? They're all transacting Bitcoin, right? Yeah, the alpaca socks was really cheap, right? Back then, 5 Bitcoin. If you're around those days, this is like the de facto, what is Bitcoin kind of video. If you've seen that, you kind of heard that in your head right now, I'm hearing in my head, right? What is Bitcoin? And the thing that you can buy with Bitcoin is like alpaca socks, only 5 Bitcoin each, a pair. Yeah, it's really cheap. But then no, right? So you transact money, right? So, and more, right? So you build stuff around Bitcoin. You don't build on Bitcoin, you build around Bitcoin, right? So I still remember Satoshi Dice when this came around, where this is one of the things where it really filled the block when it first came around. So before Satoshi Dice came around, Satoshi Dice is like a gambling site where you can make a payment to an address, and then if it's below a certain, if your block is mined below a certain hash rate, and then you get to win. So it's automated and it's fair. It was quite fun. So before Satoshi Dice came around, you can send Bitcoin transactions for pretty much nothing, like no fee at all. And when Satoshi Dice came around, it started to fill the block. And the block transactions pretty much filled with Satoshi Dice transactions. And it's no longer around, but that's what people were doing before Bitcoin tech came around, right? So what happened that you hear in the news these days, like all these innovations suddenly happened on Bitcoin side. So what really happened from back then until now? Was it because there has been some upgrades on Bitcoin, or was it there because, I don't know, right? If you look in there, is there any major upgrades on Bitcoin? Are we having smart contract support on Bitcoin? On Bitcoin itself, not as secondary or something else, but are there those things happen? But the answer is no. Like Bitcoin hasn't changed much since its inception. So sure, there has been like some changes along the way, but they're all around Bitcoin and they're all around payment. They're not about adding smart contract support and all of that. So, but what really enabled all of this thing, it's where if you look at the Bitcoin blockchain itself, so when you make payment to someone, you say, u-zyn, I'm making a payment to John, for instance, I don't know, like $2. And then at the end of that, there's a white space. Like if you write a check, for instance, there's a white space, you can write anything you want. So that white space that has to be carried along by Bitcoin blockchain as well. So that white space can be used to build stuff, right? So this is what's happening back then, this is what's happening today as well. So colored coin, if you know Tether, that's USDT, right? So USDT, a lot of you know that as an ERC20 today, but it wasn't started as an ERC20 token. It wasn't started as an Ethereum token. It was started as a Bitcoin Omni token, and it was using that white space. And it was really, really hard to build. I remember building services around USDT before they launched on Ethereum. It was really hard to build. And pretty much using that white space, right? So Tether, it was fun time for Bitcoin. US was super high, and then what really took off for Tether, before that it wasn't like really matter that much, but it was there. It was there. There are some sites that deal with Tether, but most of them don't really care about it. And then Ethereum came about, and now it started this whole entire revolution that you can actually build on blockchain, because blockchain is not just money. You can actually build on that. So there's now utility on Bitcoin. So build on blockchain now, it's possible. And the next big thing that happened on Ethereum, which I'm sure all of you are familiar with if you're in the crypto space, ERC20. That's a token standard on the Ethereum side. And like before ERC20, there was actually any standard. Like you can build tokens any way you want. And it's not like, yeah, so ERC20 really kickstarted this whole boom where you can build tokens and you can build interactions between each other's token. If I have a dApps, I can interact with your ERC20 token and you can interact with mine. So we can do that without any permissions at all. And what happened, this is how I would think around, I would label this around 2015, 2014, 2015. We could see people leaving Bitcoin to build on Ethereum because it's a lot more fun over there. You can have a lot more interactions. You have dApps that you can interact with each other. You have a lending dApp, I have a borrowing dApp, you have a trading dApp. You can do a trading bot that will just borrow and just trade automatically upon this condition and all that. So it's a lot more fun, right? So we see builders leaving Bitcoin by flock, right? Everyone goes to Ethereum. And that's why Ethereum today got so big, because everything's happening over there. All the tokens are there, all the dApps are there, everything's happening over there. And then Tesla stops issuing Omni. It was actually only this year that they stopped doing that. So it has still been around, even though it has hardly been used. But Tesla actually stopped issuing Omni on Bitcoin side from this year. So if you have a Omni USDT, if you walk into Tether and say, I want my dollar back, they'll say, no, we don't honor that anymore. It's not a legal tender anymore. And it's not a tender that they will honor anymore. So what enabled this whole thing, the white space thing? I want to talk about social consensus. So this could be a new term for some of you guys. I just want to kind of explain that a little bit more, because on Bitcoin side, nothing has changed. What has changed is people understanding how to build stuff around that. So when you hear this term, social consensus, if you break it down to consensus, when you talk to people a lot, especially the last couple of years, they ask you, so you're working on a blockchain, what's your consensus? Like for me, I usually struggle to answer that, because like, what do you mean by that? What's my consensus? Consensus means like everyone agrees to something. So what they actually expect to answer is that, oh, it's proof of work, it's a proof of stake, it's a proof of something. But that's not really consensus. On blockchain, consensus are hard consensus. Everything on blockchain happens because it has to be valid. If I have 2 Bitcoin, if I'm trying to send someone else 2.1 Bitcoin, that would not be a valid transaction, because that doesn't fit with the consensus. Doesn't matter if it's proof of work, doesn't matter if it's proof of stake, doesn't matter at all. If Bitcoin suddenly changed to proof of stake, that will still be valid. It doesn't matter at all, just like Ethereum switched proof of work to proof of stake. Doesn't matter at all. So what actually is social consensus is this thing. This is a traffic light, right? So if you drive a car, you see a traffic light, and it turns red. Does your car automatically stop? Can you go? You just stop because it turns red. But can you go? You can't go. No one can stop you from, no one's preventing you from going. It's just socially acceptable that if you see a red light, you have to stop. Sure, that's a fine that you have to pay, but your car doesn't automatically stop. Because they can also make it a hard consensus by making sure that if your car sees a red light, you have to stop at the line, or the car in front of you stop behind the car. You kind of make it a hard consensus, and then you hit on accelerator, it will not go. But it's a social consensus, it's a soft consensus. And this is what all that's happening on Bitcoin is today, because we're all using the same white space to build things on that. We're basically just sending messages to each other and saying that this is a white space, and this is what Ordinals is all about, right? So all of this fits into that white space. I'm simplifying a lot, but it's all this fits into the white space that you have on a Bitcoin transaction. So when you inscribe something on Ordinals, in this case, a hello world, you put a hello world on a Bitcoin transaction, you're putting it in attachment to an actual Bitcoin payment. You could be paying a fee to a miner, you could be paying someone else, but it's a white space that you're putting your stuff in there. So that could also be image as well. So if you do an application/image, then you can attach an image there. Of course, it will be much larger on the payload. The payload here will be like the serialized binary for the image, but it will be much larger. But you can do all of that. So this is what Ordinals is all about, putting data on the Bitcoin blockchain using that white space, right? It's a made-up rule on Bitcoin. So why does it have to be up push 1? Why does it have to be 0? Why does it have to be like false and if and if? No one says that. It's just basically a made-up rule by the creator himself, KC. It says that if you want to be an acceptable, if your stuff wants to be an ordinal, it has to fulfill this rule, because he sets it. If you want to follow my rule, you follow my rule. Otherwise, you set up your own rule, and that's your own ordinal, if you want to call it, right? So it's just a made-up rule. And everyone that wants to parse Ordinals agrees to the same rule. This is what social consensus is all about. And then we have this monstrosity that's built on top of that. It's called BRC20. So BRC20, it sounds very similar to ERC20. B stands for Bitcoin. And ERC20 is actually, the number 20 actually came from the 20th proposal on the Ethereum side. But on this side, there's no it's not a Bitcoin proposal. It's just basically just trying to mimic what on the Ethereum side is. And it's trying to build on this thing called Ordinals on top of that, right? So if you Google BRC20, you can kind of see a few tokens there. None of them are actually being used yet. It's just being speculative traded. But you can see this from the creator. He's also here, by the way, for the conference. Really nice guy. I mean, from the creators, from the site itself, you can see that BRC20, if you decide to test, this will be worthless, used at your own risk. So he's creating this as a joke. It's a joke, right? You're creating BRC20 as a joke. And then he also says here, like on the bottom part here, I would also like to mention that the concept of issuing assets on Bitcoin blockchain is not novel. And Taro, which is a different standard, it's a better solution. So BRC20 is not a better solution. It's basically just a joke that the guy just created for fun to build it on Ordinals, and somehow it took off. So a lot of people started trading BRC20, a lot of people started to mint, and it took off. And so this is what happened on BRC20, right? So it's built on Bitcoin layer. So Ordinals is built on Bitcoin. Bitcoin is fungible. Basically, fungible means that the $1, one Bitcoin is the same as the other Bitcoin. And then Ordinals basically an NFT layer on top of that. And then you build BRC20 on top of the NFT layer. So it's kind of like, why do you have to do this? Why do you have to go through fungible, non-fungible, fungible? That's why it's such a monstrosity to deal with, to work with. It's really, really hard to use. And the guy just created it for fun. It's kind of like it's a joke, but somehow it took off. So now that it takes off, it's socially acceptable as a standard, and now it will be traded as a token, even though it's not really, a good design in the first place. I mean, the guy was smart. It's not like he created it because he know that he doesn't know how to do it. He's created it as a joke. He didn't expect it to take off, but yet it takes off. So now he has to maintain it, and he's actually working on a new improvement on how to make it better. So is that really a problem? And is Bitcoin actually sustainable? Because if you hear from what I say here, we're building on a very, very soft consensus. There's hard consensus on Bitcoin itself, and everything else is just basically white space. So I'm going to give one example here. What does it mean? Why is it so bad? So if you have BRC20, I have BRC20. Let's say I have 2 tokens, right? I'm going to send someone else 1 token. I'm just sending that message on the Bitcoin side. Say I send 1 token to someone else, and then I still have 1 on my side. So someone has to keep track of that. And if I send 1.5 token, now I have 1, I send 1.5 to someone else. On Bitcoin side, it doesn't understand BRC20. It's still a valid transaction. So that is still being mined by the miner because the miner doesn't understand BRC20. Bitcoin consensus doesn't understand that. So it's still a valid BRC20 transaction. But if you parse the blockchain, if you socially accepted that, that's how BRC20 would work. You have to see that even though this is mined, this is a valid transaction with a TX ID, and there's like 100 confirmation or whatever, it's still an invalid transaction because the sender doesn't even have the token to begin with. So that's why it's so hard to build on Bitcoin. But is it sustainable? I know this is a little bit technical. I just want to explain this a little bit of an analogy here. Anyone here understand this diagram? Seen this before? Great. So yeah, so you're from software engineer? Network? PM. Awesome. Technical PM, I guess. Right. Anyone else? So this diagram is it's how your internet works, how your network works, right? So go to the physical layer. This is how your wires, if you wire your networks and all that, the copper wire, if you go through fiber, so all that physical layer. And then there's multiple layers before it goes to the top layer. So this is how internet works. So this is how networking works today. There's so many different layers, and all this layer doesn't care about what's on top. Like the physical layer on the bottom, basically just transmitting and relaying messages on the electron side, on the atomic side. It doesn't even care what message it carries. And then moving forward on top, they're just caring about their stuff and making sure that only valid stuff goes through. So on transport layer, for instance, they talk about TCP and UCP. If any of those packets are wrapped correctly as a TCP or UCP packet, it will get passed along because there's a destination address that will pass along. And if it doesn't wrap correctly, it was just being discarded. So you can go through all these different layers up to layer 3, and then layer 4 is not a valid TCP USP, it get dropped. And then just keep moving on. So whatever that you use this day is going through all these 7 different layers all the time, right? You use your phone, use your Mac, use whatever that you use all of that. And it is the same as well for Bitcoin, right? So Bitcoin, it's not a layer on top of application, it's basically the application on the same layer. So what we have here, it's very similar. So The Bitcoin cares about Bitcoin only, even if there's invalid BRC20 transaction, it still move on. So, and then we have Ordinals, only care about Ordinals. If not invalid Ordinals, it drops it for sure. Like if you run an Ordinals client, it will drop it, but Bitcoin layer will still mine it. So you're just caring about what's below you, and I'm sorry, you just what's on your layer, relying all those below you to discard whatever that's invalid, and then what's on top, you don't care. So Bitcoin doesn't care about Ordinals doesn't care about BRC20. But this is the same model that you see on network. This is the same model that you will see on Bitcoin. It is a social consensus today, but it doesn't mean that it will be a social consensus tomorrow, because a lot more tools will be built on top of Bitcoin. A lot more stuff will get onto Bitcoin. A lot more tools and a lot more clients, a lot more standards will get into Bitcoin. And then it becomes a standard. It becomes a layer that you can build on top of that, and it becomes solid. So right now, yes, it's a social consensus at the Bitcoin layer, but then it gets more solid after that. So, yeah, so Cake Group, what we're doing here as well, we want to contribute to make Bitcoin more buildable, right? So we launch Oddsar, and along the way, because it's so hard to build on Bitcoin, and all these tools that we build along the way, we open source them as well, so that other developers can build on Bitcoin, can build on Ordinals a lot more easier. I'm not going to go into the details, but these are the stuff that we do to make it more open, to make it more easier to build. And some of the suggestions that we've made to make Ordinals more friendly for people to use is called Ordinals Improvement Proposals, OIPs.io. So there's some proposals already, some from us, and some actually from other community members as well. Just all in a way to make Bitcoin, to make Ordinals more sane to build and to use and more fun and all of that. And yes, so in all my summary, I just want to say that Bitcoin development is back. So we can see the ladder that I showed that. Not everyone's coming back, but there are some people coming back. And the smartest people are coming back first. Usually that's the case. They come back, trying to build bridges, trying to build tools, trying to build all this stuff, SDKs and tools and all that. And soon we will see a flux of developers coming back, because all these social layers will now be a standard that you can actually rely on. And when we have proper clients on BRC20, you don't have to care about Bitcoin anymore. You don't have to care about Ordinals anymore. You just have to care about token. And a good SDK, you can just say, how much this address has as a BRC20, how much is this send valid, or you don't even care about Bitcoin transaction, because all of that is all abstracted away from you. And this is how layer can become a hard consensus moving forward. And yeah, before I go, yeah, if you haven't signed up for this, if you're interested in Ordinals and more, sign up for this. It's not going to be super technical. It's more fun as well. It's a very fun event. And these are all the who's who there. Yeah, Udi, like the key influencer on the Ordinal space, and yeah, now that it's not here, but now that I don't have to hide it anymore because he's here already. KC, the creator of Ordinals, is actually there as well tomorrow. So if you're there, you can meet him. He's usually doesn't show up that much, but now he's here. I think I can mention that. Yeah, so if you want to meet him, go to the event and meet him. And yeah, that's where I'll be tomorrow, and that's what I've been thinking about. And I'll see you tomorrow if you're there. Thank you. Do you do questions or no? Any questions? For Julian? All right. Thanks everyone for coming. Have a good night. Thank you. Have a great 3049 week.
That's a really good talk.
Yeah.